Hello guys, it's Max here from Daily Market Movements. Welcome back to another market analysis video where today we are going to be discussing some of the major markets here in the US and trying to forecast where the markets could be heading within the next 24 hours or, throughout the remainder of this trading week. Before I start today's video, guys, anyone who is interested in joining my trading team, what does this mean? It means receiving trading tips from myself. I share with you all my trades as well as my daily market research that I post regarding the positions that I have open at that time. Every single morning prior to the US markets opening, I charge a very small fee of $29. There's currently over 100 people that follow me at present, but I'm going to try and build this number up to 1,000 plus. By the end of next year. So it would be great to have you all on board. But let's get started with today's video. Now, before I start, I want to quickly show you the economic calendar as we head into tomorrow. We have a lot of data that we need to monitor, and that being the CPI inflation report. Obviously, we've been on this nice move lower month after month in the CPI report, currently expecting a number of around 2.6%. So this will be the lowest number in over 3 years since pretty much the COVID pandemic. So if we could get a number that beats 2.6%, that would be very, very encouraging. And of course, will add more pressure on the Fed to perhaps cut by 0.5 basis points rather than 0.25 basis points as they are getting closer and closer to their target. And of course, last week we had the jobs number, which come in slightly softer than expected. So that's quite worrying that we're now starting to see the labour market weaken. Obviously, following tomorrow's CPI data, there will be the PPI on Thursday. So PPI, obviously, the producer price index, that will obviously have some significance to it as well. But let's get started here with the S&P 500. We saw a very positive move yesterday. All major indexes traded higher during yesterday's trading session, but the big question is, was this just a dead cat bounce? I kind of said during yesterday's trading video that I'm kind of worried that this could just be a massive ABC correction where we could see a break below the lows that we formed all the way back on the 5th of August at around 5,087. I think what really needs to happen here is a break above the previous swing high. So we had a swing high back on the 6th of September, swing high back on the 5th of September, and a swing high back on the 4th of September. So we need to break one of these swing highs, and until that happens, we're still kind of in this downtrend. Or if I just draw a trend line, you can kind of see we're just still within this downtrend here for the S&P 500, trading around a 50-day EMA. If we just quickly put you on the 4-hour chart, this will kind of clear these things up a little bit better. Here you go, we're still in this downtrend here for the S&P 500, and it's not really until we break above one of the swing highs that, you can start to turn bullish again and perhaps go and target the swing highs that we achieved back at the beginning of September. So, a break above the previous swing high here on a 4-hour chart gets us back above the 250-day EMA as well. Same here for the Nasdaq 100, just zooming out. This is the daily chart, of course. Yesterday we had that big bounce of around 1.88%, which obviously was welcomed, but the big question is, are we in this bigger ABC correctional phase? Very similar to the S&P 500. If I just take us into the 4-hour chart here, we're still kind of in this downtrend line. I think in the Nasdaq 100, we're more so in this major downtrend, and we still have a lot of work to do until we can start to flip bullish here for the Nasdaq 100. Of course, in terms of seasonal trends, right now, September is a very negative month. On average, it does fall. So we do typically see some weakness in the month of September before we enter the month of October, which is much better. But I think what should be noted as well is that we have seen a front-loaded huge negative start to the month. So yeah, we might have seen a lot of the bad news front-loaded in the month, and it might just be the case now. The next 2 or 3 weeks, we try and regain or pair some of the losses which initially occurred. Moving over to the Dow Jones 30, Dow Jones, technically speaking, looks a lot better, and that's just due simply to its larger exposure to financial stocks and not so much in tech. If you look at the Nasdaq, obviously that's a technology index, but the S&P 500 has very large exposure of stocks like Nvidia, for example, which represents 6% of the index. And we all know what's happened with Nvidia recently. We've fallen significantly here. But as I mentioned during yesterday's trading session, these stocks are looking like they are approaching support. I said yesterday that Nvidia is kind of only around 5, 6, let's say 7% away from hitting the bottom of this wedge, and that will obviously offer some sort of support. So that could be a positive for the overall indexes because, as I just said, Nvidia does represent 6% of the S&P 500. Let's just have a quick look at the dollar. Dollar bouncing today up at around 101.6. Again, I do see this as a dead cat bounce for the US dollar before declining down towards 97. I think this breaks below 100 before the end of the year, before we go and hit 97. We're just, obviously bouncing because on the RSI we did hit oversold levels. Of course, looking at the TNX as well. TNX currently trading at 3.719 with the CPI tomorrow. That's going to influence this market significantly. But I think as we go into the FOMC meeting next week, where we do get that potential cut, maybe 25 basis points, maybe 50. Different people have different opinions. I'm probably more in the 0.25 basis point camp at the moment, because if the Fed did come out and give a 0.5 basis point cut, that would potentially signal a worrying sign for investors. Do the Fed know something that we don't? So I think that the Fed would like to ease into cuts, with many more cuts to follow in the coming months. But one market I really do like, and we have some very heavy exposure to this industry over in my team right now, my Signal team, and that's Bitcoin. Bitcoin rallying significantly yesterday. And I do believe there's a very large potential that Bitcoin will decouple. It will uncorrelate with the Nasdaq 100, with the stock market, because this past couple of years we've seen, since October roughly 2022, we've seen the Bitcoin market rally along with the S&P 500. If I just put this in the daily chart, when did we bottom for the S&P 500? It was October 2022. If I just zoom all the way back out here. Here we go. It was around this October 2022 period where we've seen this big rally in the US stock market, and that's exactly what Bitcoin's done. It's followed the stock market, but I do believe that we are about to see a decoupling, a decorrelation here, where Bitcoin can take off and leave the stock market in the dust. I've been posting some charts, some historical data charts with regards to Bitcoin and how well it performs from October of this year all the way through until November next year. And we are about to enter the most bullish phase of the Bitcoin cycle. So if you guys would like to copy some of the trades that we currently have open in the crypto space, so we have a direct position right now opening in Bitcoin and some of the Bitcoin mining stocks, then make sure you do subscribe to dailymarketmovements.com. I've left the website link in the description of today's YouTube video, team. And as I mentioned, trying to scale the group from 100 followers all the way up to north of 1,000 by the end of next year. And I would love for you guys to be part of that journey. But thank you very much for tuning in for today's video. I'll try and post one tomorrow, post CPI data report, because that is sure to move the markets.